NVIDIA is currently one of the most valuable and influential technology companies in the world, dominating the market for graphics processing units and artificial intelligence computing. As of August 2025, the stock trades at approximately $182 per share, near the upper end of its range after delivering record-breaking earnings in the second quarter of fiscal year 2025. In that quarter, NVIDIA reported revenue of $30.04 billion, representing an astonishing increase of 122% compared to the same period last year and a 15% increase from the previous quarter. Net income reached $16.6 billion, growing 168% year over year. On a GAAP basis, earnings per diluted share was 67 cents, while non-GAAP earnings was 68 cents. Gross margins came in at 75.1% on a GAAP basis and 75.7% on a non-GAAP basis, slightly lower than the prior quarter, but significantly higher than a year earlier. The overwhelming driver of this performance was the data center segment, which brought in $26.3 billion in revenue during the quarter, up 154% year over year, and accounting for nearly 88% of total sales. This growth is fueled by unprecedented demand for AI infrastructure, cloud computing, and large-scale model training. NVIDIA's GPUs have become the default choice for AI workloads, and hyperscale cloud providers are investing heavily in expanding capacity with NVIDIA hardware. Other segments also performed well, though on a smaller scale. Gaming revenue rose 16% to approximately $2.9 billion as the PC gaming market began to stabilize. Professional visualization revenue increased 20% to around $454 million, and the automotive and OEM segments also saw growth. Product innovation remains at the heart of NVIDIA's strategy. The Hopper architecture continues to lead the high-performance GPU market, while the company's next-generation Blackwell platform is already in sampling and is expected to contribute several billion dollars in revenue beginning in the fourth quarter. NVIDIA is also developing the Rubin microarchitecture and Vera CPU, planned for deployment over the next few years, which will expand its presence in AI computing and potentially challenge competitors in data center CPUs. On the networking side, the Spectrum-X platform is gaining traction as a specialized networking solution for AI workloads. And the AI enterprise software suite is scaling rapidly, with management expecting it to reach a $2 billion annual run rate in the near future. These software and networking products strengthen NVIDIA's ecosystem and help lock in customers beyond the hardware layer. NVIDIA's market dominance is reflected in its market share. As of early 2025, the company controlled over 80% of the GPU market for AI training and inference, and more than 92% of the discrete desktop and laptop GPU market. The CUDA software ecosystem, developed over the past 2 decades, remains a key competitive advantage, creating high switching costs for developers and enterprises that have built AI models and workflows around NVIDIA's technology. However, the company faces significant geopolitical and regulatory challenges. The United States government recently struck a deal that allows NVIDIA to resume certain AI chip exports to China, including the H20 chip, in exchange for remitting 15% of related revenue to the US Treasury. While this arrangement allows NVIDIA to maintain access to a large market, it has also sparked controversy, with critics describing it as a costly compliance burden. Meanwhile, in China, regulators are scrutinizing NVIDIA's products for potential security risks, and state media have encouraged companies to adopt domestic alternatives. The Chinese government has summoned NVIDIA for discussions about these concerns, signaling a potential shift in how foreign AI hardware providers are treated in the country. In response to supply chain risks and to meet growing demand, NVIDIA is dramatically expanding its US manufacturing and infrastructure footprint. The company has announced plans to invest hundreds of billions of dollars over the coming years in domestic supply chain capacity, particularly in partnership with TSMC's facilities in Arizona. This move is aimed at securing production capacity for future architectures like Rubin and ensuring resilience against geopolitical disruptions. Financially, NVIDIA is in a strong position. The company's balance sheet benefits from massive cash flow generation, with data center sales providing a stable and rapidly growing revenue base. Its profitability metrics are among the best in the technology sector, and its high margins allow for aggressive reinvestment in research, development, and capacity expansion. The company's valuation remains high relative to the broader market, reflecting investor confidence in its continued dominance of the AI computing space. This premium pricing assumes that NVIDIA will maintain or even extend its lead over competitors such as AMD, Intel, and emerging AI chip startups. In the near term, NVIDIA's growth will depend on the pace of adoption for the Blackwell platform, the scale of AI model training investment from major cloud providers, and the stability of global trade relationships, particularly with China. In the longer term, the company's success will hinge on its ability to expand its software and networking businesses, diversify beyond GPUs, and fend off competition from both established rivals and new entrants. Given its technology leadership, entrenched market share, and deep integration into the AI ecosystem, NVIDIA is positioned to remain the defining company of the AI era. But investors should remain aware of the geopolitical and competitive risks that could impact its trajectory.